microfinance, like say this, on a personal account is my passion. And let me assure this very honest Catholic that State Bank fully owns and believes in the utility of microfinance, both in poverty alleviation as well as in financial inclusion. So we have full belief and faith in the ability and utility of microfinance in addressing the grassroots level issues with respect to financial inclusion, with respect to poverty alleviation. And let me congratulate Pakistan Microfinance Network for organizing this event. And I believe that we will be able to have some good practicable recommendations that will be coming out from this event, the 2 days event, that will be providing the sort of a real guidance both to all the stakeholders, and that includes the regulators, that includes the donors, that includes the industry practitioners. Yes, there are issues faced by the industry. The industry has done remarkably well in the last, say, 10 to 15 years. For the last 3 years, since the initiation of pandemic, and then the floods that we had witnessed last year, that has created severe challenges for the industry. That has created challenges both for the microfinance banks regulated by the as well as by the microfinance institutions, non-banking microfinance institutions. Microfinance banks have faced issues with respect to the portfolio quality, with respect to the repayments by the clients. Similarly, MFIs also they have relatively better with respect to their portfolio quality, but they are facing severe issues with respect to the liquidity. We must see that how can we make such mechanisms and such arrangements that these microfinance institutions continue to have the access to the liquidity. If we don't come up with the right kind of solutions, then we may lose the great amount of work and contribution that has been made by the industry. So for that purpose, we need to work together. We need to work with the collaborative mechanism. We at the state bank level, at the SECP level, as well as the non-banking microfinance institutions are concerned, at the donors level, and at the level of Pakistan Microfinance Network. So the industry, the regulators, the donors, the apex bodies need to collaborate and sit together and develop most practical mechanism that could enable the microfinance banks as well as the microfinance institutions to have access to capital, to have access to liquidity, to continue to provide funding to the microfinance borrowers in the country. For that purpose, let me define one thing. You will find us at the forefront of this initiative. I've already requested my team that we need to develop a strategy to revive the microfinance industry to address these issues. But at the same time, the industry will have to provide that comfort to the regulator, to the donors, and to the apex bodies that they are really contributing. They are having those governance systems and the delivery models that are instrumental in helping the client. If that comfort is coming from the industry, then it will be much easier for us to come up with much more better initiatives. And for that matter, let me emphasize one thing, that we want that the industry should remain focused on its key objective of helping the low-income segment and the poor clientele in improving its income levels through preventative business activities. For that purpose, we must see and reassess, as Mr. Raji highlighted, that we must see that whether these nano loans are contributing towards asset creation or contributing towards asset depletion. Because these nano loans, they are largely consumption oriented. We don't undermine the need of these consumption loans, but we must see that should that be the only focus, or should that be the key focus of the microfinance banks, which are meant for primarily to help the poor people improve the income levels. So are these nano loans contributing towards the improvement in income levels? We must see that. And the rates at which these nano loans are disbursed, that also needs to be assessed. I would encourage the panelists of the various sessions that they must see that if there is a need to see that how can we better use that platform of digital financing, particularly towards the improvement in the income level of the clientele, rather than encouraging them to indulge in more consumption and be more indebted. I would also like to emphasize, just to see the gold loans. Here again, the core focus, when I was having collaboration with the microfinance industry at at the very initial stages, early 2001 or so. So we all had that belief that we need to be working together for poverty elimination, for asset creation. Are these gold loans creating those assets? Rather, in my opinion, if you see my personal view, they may result in asset depletion in the poor in the lower segments. The poor woman having some small amount of jewelry available with her could be lending that, could be giving that jewelry to her husband or to the main member to get the loan, and that loan may be consumed by the male counterpart, and the woman is left with asset depletion. So we must see that, and that all these things are critical for giving that comfort to the regulators, to the donors, that the real objective for which the microfinance institutions and the microfinance banks have been created, they are doing that. And let me repeat and reiterate, we have firm belief in the ability and utility of the microfinance industry. That we have to see that how to focus our energies on creating that income generation activities for our clientele. When Navisa was talking about that agri-tech model, I was thinking that as if I am saying, see that this is the real model. We must provide an overall ecosystem to our clients. The clientele is too weak. They cannot have the inputs at good price. They cannot have the best inputs. So I wrote a small piece, I think 7-8 years back, on the very same lines, that let's have those interventions whereby these microfinance banks or even Islamic banks or the MFIs can replace these RPs with these interventions whereby they can get quality inputs at very, very attractive prices rather than being exploited by the RP or rather than being exploited by the other stakeholders. Similarly, when you are going to sell your produce, again they are exploited. They don't have that cloud to fetch good prices. They are exploited by the RPs and the middlemen. So how can we provide that overall ecosystem be in the form of the consultancy, so that they can have best use of water, best use of pesticides, and similarly, they could have best inputs and should be able to sell their produce at good prices. And this is not only relevant for the agriculture sector. Agriculture sector is the prime. I would agree with the research. I would endorse it. But at the same time, this is absolutely true for other micro enterprises. They are very small. If we can create that ecosystem whereby we can provide them the quality inputs, we can provide them that those trainings whereby they could produce the quality products, and then there is some mechanism available by the even at the PML level or at the industry level, whereby some hand-holding sort of mechanism is available to enable them to market and sell the produce. So, just mere provision of financial services would not be enough. We will have to focus on an overall ecosystem where our customers can really benefit from the financial services that are being provided by the institutions. Unless our customer is prospering, we cannot prosper. So we have to make sure that the people we are dealing with, our customers, they are prospering. It will ensure sustainability of the MFIs, NBPs, and all the other stakeholders if my customer is possible. So we must focus on how we can tailor and adjust our interventions so that the real objective of hand-holding the real customers at the grassroots level, they could be brought up. And as Kabir was saying, that although the number seems to be very fancy, that we have over 9.3 million graduates, but still more than 3.2 million are nanoplants. And then there are multiple loans. So as far as the households are concerned, we have just reached not more than 10-15%. Still, 80-85% people are still left on the informal money lenders and all these other things. I did a survey when I was looking at this microfinance sector, development finance sector of somewhere in 2010 or 2011. So 75% of farmers were dependent on informal sectors, not on MFIs, not on MFPs, on RPs. And the terms of trade of those RPs were very odd for the farmers. So we must see that how can we really make an impact and expand this outlay. This 10-15% is just the tip of the iceberg. So let me reiterate that our full support is available in the sector. As I was introducing myself to Nani, that I am the DG for the development side. So I'm not wearing the stability side. Stability is very, very important. But at the same time, stability will come when the institutions are flourishing, when the customers are flourishing. So we must create that ecosystem where the microfinance institutions have that liquidity, have that access to funds, and then we have that mechanism to ensure either at the level of State Bank, at the level of SCCP, at the level of PMIC, and at the level of PML that they are doing their real job. We have that overall ecosystem collectively. And I would reiterate that let's work together and develop a strategy. There is a problem. If we say that there is no problem, there is an issue. It's a very, very challenging environment. We must sit together and come up with a strategy which could revive the sector. Lastly, let me emphasize, as Raji has also covered this, that climate risk facility. We must have that facility. We are interacting with World Bank, we are interacting with ADB, and we are in discussion with climate stakeholders. I believe that this is very, very essential prerequisite to allow the industry to grow. So let me assure you, in my final concluding remarks, that we fully believe in the utility of microfinance, and we will be going all out to help the sector to revive and to its real goal. Thank you very much.
Thank you so much, Salimullah Saab. And I think Salimullah Saab kind of summed up what we've been hearing from the morning, when he used the words actually, that everything needs to be done for the client. And everybody needs to come together. It has to be an all-hands-on-deck approach, whether it is the microfinance providers, whether it is the regulators, whether it is the funders or the multilateral institutions that are working for financial inclusion in Pakistan. So thank you so much, sir. And thank you so much to all of our esteemed speakers in the morning, from the morning onwards. We will now shift to a very special presentation of Lifetime Achievement Awards to some of the stalwarts of microfinance in Pakistan.
All I have to say is, coming out of all these speeches that I've been hearing from the morning, what we are up against, it is not 15% penetration or reach of microfinance. It is only 3%, considering 38 million households in Pakistan. 20% are enabled, financially enabled. They don't need a loan. So we are left with 30 million. Out of that, we are servicing only 1 million households. So you can very well imagine the kind of gap we are talking about. And most of it is obviously a bike which is lended on 40% annual loan. So that is the challenge we are up against. I have a background of research last almost 2.5, 3 decades, and most of it is with the FMCG sector. If you recall, 30 years ago or 40 years ago, everybody is having a bottled water in front of 40 years ago, there was no bottled water. If you even talk about it, people would call you insane. Water? You don't think anyone would buy water, pay money to get water? It was out of question. 30 years ago, diapers. Nobody could even think of purchasing a disposable diaper. Women at home used to, wash it every time. There was no disposable diapers. But today, the penetration of bottled water is almost 70%. Individually. The penetration of diapers in households where there are kids under age 5 or 6, the penetration is over 70%. How it happened is because of the extensive investment in the research, not on customer satisfaction or mystery shopping. That is the only mandated research which happens in the category, and I hardly see research is happening on the category understanding. What are the barriers why people are not opting for microfinance? What are the issues they are facing when they go and try to get a loan? We never talked about it. We never thought. The second area, are we reaching out to the right people? Because one of the recent studies that we have done, we realized the quality of life impact cannot be determined because all those who lended money were not below the poverty line. Majority of it, a large majority of it, is already above the poverty line. So, are we reaching out to the right audience is the other question that we should ask ourselves in order to increase, in order to reach the remaining 29 million households who would want a loan but they couldn't get one. The third thing, sustainability is of course a challenge. Sustainable and inclusive is a challenge. We have to see who can afford to pay it back. Yes. So where to draw the line? There has to be a new set of indicators, a new set of variables defining their quality of life, their affordability. A new set of product evolution is required, because I have never heard anyone talking about doing a conjoint analysis in the microfinance sector to make a portfolio optimization. I have never heard people doing larger scale concept understanding or product development exercises with their respective customers to actually develop what they want. The third area where we think research can definitely help a lot is standardization of customer satisfaction and mystery shopping, because hand-holding, Salim Saab just mentioned, some hand-holding should be there. We are not saying that we are creating a benchmark or a benchmark service, but as PMN and us together can establish a gold standard for mystery shopping and customer service so that everybody, every single institution in this ecosystem gets a report which is benchmarked against the industry. If they are not getting individual reports from all the banks, at least they get a benchmark of the industry average so that they can benchmark themselves. And unlike the current practices, every single institution who under the state bank regulation is bound to do a customer satisfaction or mystery shopping survey, they are molding it the way they want it. The questionnaire design, are you really satisfied? I'm sure you must be really satisfied with me. That's the time, if we do non-standard surveys, outside Pakistan there's complete benchmarking service. There's a global organization who does that. And that single organization is responsible to do surveys for every single bank, and every single bank is mandated to use their service for benchmarking, for process improvement. So these are the areas, and why going into this venture, we were in the discussion, rather initially the relationship started 6 years ago almost, and we were working together as partners. We believe we know research and they believe they know the category. So now we believe augmenting the two, someone who understands the category and someone who understands consumer behavior, consumer science. If we combine the power of two, it is going to make a difference in terms of exploring those 29 million remaining who are still out there in the market waiting for their chance to get a loan. So I think that is pretty much it.
थैंक यू वेरी साहब। मैं सिर्फ एक चीज़ ऐड करना चाहूँगा। तो एट द सेक्टर लेवल हम कुछ कंज्यूमर बिहेवियर और रिसर्च करेंगे मिलके, जिसमें एक चीज़ तो हम और देखना चाहते हैं, विच इज़ इन द फॉर्म ऑफ लॉन्गिट्यूडनल स्टडी और पैनल डेटा के साथ, क्योंकि जो करंट मैक्रो इकोनॉमिक क्राइसिस आया है उसके अंदर मल्टीपल प्लेयर्स जो लैंडिंग करते हैं, दे हैव क्वेश्चंस अराउंड द डिमांड साइड. And do they still have the capacity to repay and at the rates at which they are being loaned at this current time? तो हम एक पैनल डेटा के ऊपर जाना चाहते हैं जिसमें हम over a period of time ये and with different bumps and जो economic cycles होते हैं, we can analyze the consumer behavior of the clients also. So that's one of the key research that we are going to do together. So thank you very much.
I think what we are looking to do is incorporate the best practices around climate adaptation and incorporating those into those literacy sessions so we can raise the awareness amongst the segment which is most likely to impact a lot or has already impacted. So that's the number one thing. I think it starts with awareness and consciousness that this is a real issue. And it's not that it has only happened once. As we know, Pakistan is amongst the top 10 vulnerable countries to climate change. It's a question of time that, God forbid, it's going to happen again. And we need to be prepared on a war footing for that. So the number one thing is to have the awareness and those practices. Secondly is around the product suite diversity and embedding the climate adaptable changes into our product suite. For example, embedding insurance into the existing products is something to begin with that every one of us should do, because it's a question of time. Like we said, if the customer prospers, then we prosper. right? And if they get impacted, then it's a question of time with the lag that we will get impacted, which we've seen in the last 3 years. So when we talk about the impact of the industry, which we are seeing right now, it's because the customers who we serve haven't been able to recoup from the damages we've seen from COVID and from the flooding. And that is the impact. So we need to make sure they are protected. And if they are protected, they'll have the repayment capability. And that will help enable us to be more sustainable. So that's number 2, around embedding the climate adaptable changes into existing product suite and introducing other new product suites also, like Zan mentioned. Now there are weather index insurances, right, which are available in the market. It's good to hear that Pakistan has followed. It's been done overseas globally with cyclones. There are instances, examples of Caribbean where 50% of the payments, insurance payments, were made in 7 days and 100% within 14 days. And here we are talking about 9 months where the crop cycle is already missed, right? So we need to enable those best practices into our product suite as well in order to prosper. Then the third thing is around what we talked about, the capital and liquidity. We've been working with PML and multilaterals for a long time about the climate fund. And lo and behold, in these discussions over the 10 years, we've already seen catastrophes hit our sector, which have hit us, right? So I think in order to be better prepared for next time, which I don't see, we are still not prepared well for the next catastrophe, and it's going to take down the entire industry. We need to have that cushion to handle the next shock, which doesn't exist today, and that is critical for us, right? So that's the third thing around it, is to have the necessary cushion, the liquidity and the capital to handle such shocks, which is going to be critical for the industry and for our customers to survive. So we continue to lend in the areas where it's most needed versus taking a risk-averse approach, which all of us unfortunately are taking when the demand is the highest right now. So those are the 3 things, high level, which comes to my mind, which are necessary, which we can do, which some of us are already doing, but it's not at the forefront of our priorities. But it's going to be critical that we start to prioritize, every one of our institutions start to prioritize, just like we prioritize on financial literacy, digital inclusion, financial inclusion. I think now the climate inclusion and the climate adaptation needs to be at the forefront of all of our priorities. Thank you.
Thank you very much. So we heard about awareness, product suites, innovative products, including the insurance side, and liquidity, roughly these 3 products. So maybe if your colleagues want to expand on this, maybe also on the lending side in terms of products that you want to talk about, please.
Can you hear me? So my fellow panelists, I guess they're structured in a very nice manner that has highlighted the 3 major issues that we need to work on. And I totally agree with him that the awareness part and the training part, and we need to realize that this is an issue. And a lot of people, obviously the microfinance sector which we deal with, are either underprivileged, underbanked, or they do not have that kind of awareness about the climate impact. They still feel that this is something that's been happening and it might not happen again. Just to give some facts, Pakistan produces less than 1% of carbon emission, and according to the World Climate Index, we are the most, top 500 countries. And unfortunately, nothing has been done so far. So to cover that, I think we need to have a short-term, medium-term, and long-term strategy to that. In short-term, there's obviously awareness. We can have awareness, we can have certain trainings, we can tell them. But in medium-term, what we can do is that we can leverage technology. We can have different kind of technology which can inform different farmers, telling them what kind of cyclone, what kind of flood, what can they expected in certain period, and what measures can be done. Along with the medium term, I think there's a lot of crop insurance, a lot of grain insurance. These are the products which are being used in different markets, especially in Africa, and also in one of our neighboring countries, Bangladesh. And Grameen Bank is one of a very good example. We're focusing on sustainable fishing and also agroforestry. So these are the things which we can do in medium term. And in the long term, yes, we need to work on the, we have to work on the solar panels, we have to work on wherever we see the carbon emissions can be reduced. For example, the water pumps which are being used in agriculture and our economy is based on GDP is approximately 40%. And most of the microfinance banks which are lending right now is more on agri products, either directly or indirectly. So whatever measures that can be taken, either using solar panel or leveraging technology, which is IoT sensors and all of those things, that can help us, in avoiding these kind of challenges, and also making important is that we make part of our product suite that these products are being sold, they are being informed, and the features are translated into benefits to the farmers. Because that's where the challenge is, where the literacy rate is not very high. As I just mentioned, crop insurance is something we really need to work on, because in the last 2 years we have seen, in the last we've seen in the Sindh, and this year we have seen in the Southern Punjab. So we might be expecting something happening in North, but if we start working with this from today, we might be able to avoid some damage next year.
Thank you very much.
Thank you, Assalamu alaikum everyone. I would like to thank the Pakistan Microfinance Network. Thank you to you as well, Luis. So, just to bring this in context in terms of what kind of insurance solutions could be available or are available, and how insurance can actually support all the efforts which are happening related to microfinance and microinsurance. So, we already talked about Pakistan being the top 10, I think it's number 8 in terms of the global climate risk index. Now, the two main climate-related events in Pakistan, floods and drought. I think these are the two main events. So we have excessive rainfall, we have melting of the glaciers, and then obviously rising temperatures. So whatever insurance solutions are to be designed or are available need to focus around, I would think for Pakistan at least, these two kinds of events. So now when we look at the spectrum available, we have solutions. We've spoken about crop insurance, we've spoken about livestock insurance, even things like infrastructure insurance. Floods have destroyed homes, families have been impacted, so can insurance solutions actually help in rebuilding of homes as well? But then you have on the other side, you have life insurance solutions and you have health insurance solutions where loss of life or anything to do with the health factors is taken care of. But also I think, in the morning session there was talk about parametric insurance solutions being available, but my opinion is that a lot of pilots have been done in Pakistan, and I think we see a level of innovation coming from some general insurance companies who've actually taken the risk of offering these solutions. But these pilots actually have remained small-scale pilots only. What we need to see is that how can they be upscaled. So if a pilot was done in a certain district of Pakistan regarding crop insurance, can or does that insurance company have the capacity, the financial capital to actually upscale that to the entire country? Now that is where I believe government intervention or support, I would say not really intervention, but support needs to come in. Now, we see examples of countries where disaster risk funds have been created. But as was discussed in the morning, these funds are primarily there to provide liquidity to the microfinance sector in times of climate-related events. But if Pakistan was to go in that direction, there are these 4 or 5 insurance solutions that can actually be coupled with the disaster risk fund. So if the fund is on a sovereign level, perhaps a collection of insurance companies could get together to provide, let's say, cat cover solutions linked to that fund, to provide life insurance solutions, health insurance solutions. Crop insurance obviously is something that's directly related to what happens after floods. Livestock, again, that is something, loss of livestock was seen in last year's floods as well. What is important to understand is that the frequency of these events is increasing. So if a few decades ago, a large-scale flood was a 1 in 10-year event or 1 in 15-year event, it is actually becoming a 1 in 5-year event now. And all the research that is happening on this region, especially Pakistan, the research institutes say that this is just a tip of the iceberg. Pakistan actually is at the crossroad right now, and these floods and droughts are going to become even more severe as we go forward. So therefore, there is a need that at a national level, and obviously we have from SSCB as well, and we were just chatting before this panel, that work is being done in that direction, but that work will only be complete when the insurance sector is taken on board. And I would think that a consortium of the insurance industry working along with the regulator to move in the direction of a disaster risk fund is, I think, something that Pakistan needs right now. We've seen examples. Bangladesh was quoted, and Bangladesh is a flood-prone. They've been having floods for the last 50 years, every second, third year, and they went in that direction. We've seen countries in the African region where drought is one of the problems, and national level efforts have been made to actually support the microfinance customers as well, but the general population which is prone to these kind of events. I think Pakistan has been late. We've spoken about it in these conferences such as these multiple times, but I think if there is regulatory drive and we are moving in that direction, we probably need to do it very, very quickly. I would say that the insurance sector is going to support such an initiative by the government, whether it is the non-life insurance sector or the life insurance sector. We all can play our part in terms of the spectrum of the solutions that we can provide, right from life insurance, health insurance, disability insurance, accidental insurance, to crop insurance, livestock insurance. The whole spectrum is available. It's just to create an enabling environment for the industry to take that step forward and then work with the government. I feel that Pakistan, unfortunately, we are going to see more of these events happening in the future. And as a country, we are just not ready. The government is, the moment as such an event happens, the government's priority is relief and then rehabilitation. That is what they focus on. We rely on donor agencies to provide support to help us with all of this. But in parallel, if we had a disaster risk fund coupled with insurance, that is going to take care of the livelihoods of the people which has been impacted. And the fund can help them get back on their feet while the government is actually focusing on relief and all the other efforts. So that is my take, that I think it is time that we move in that direction of a national level effort to work on these kind of climate-induced events. And the insurance sector is behind the government and the regulator to support them in all ways possible.
Thank you very much indeed. So we heard a lot about regulatory relief and measures on the regulatory side, but also this climate risk facility has been mentioned in on this panel a few times. So I want to speak about this a little bit in just a second, but maybe before I go there, before I ask you to indulge me, maybe I can ask a couple of very pointed questions to the panel. One is around, and this is a question I have personally, so around pricing. So I wonder to what extent the sector can provide incentives for climate adaptation to its clients. So, for example, if your clients take measures to reduce risk and become more resilient, do you reflect this in your product prices? Is it something that can be thought of? Would it make sense with life insurance, for example? Several of you said that insurance pilots have been done in Pakistan. There's some interesting innovation happening as per this morning, but they don't often scale these initiatives. So what are the challenges there? Has it to do with price as well? So I wonder what the link is between what you're offering, the price you're asking, and climate adaptation and resilience measures.
Initially it was a challenge creating that awareness among the unbanked and privileged, because they are the small borrowers. So paying a little extra cost on anything would have a burden on them. So creating an awareness by telling them this is something which is going to have a long-term benefit, in which the solar powers, which has really affected them in terms of a positive manner, by using different water pumps which they use for farming and all other techniques, which is the modern techniques of farming, which are being run through electricity, are being converted into solar. And that's what NBP and Mobility Bank is trying to do, and make it an important part of the product suite, because this is something which we really believe that the farmers, until it cannot reduce their cost, their growth will not grow, and their business income will not be sufficient. And then obviously if the business income is not going to grow, their capacity of repayment is not going to be as good. So this is something which is being working on. It's taken some time, but now I guess the realization is there and understanding of the farmers and also small borrowers is there. As far as the insurance is concerned, that is something is a slight challenge right now. But I guess in the last 2 years, what we have faced in floods, especially in South and in the South Punjab and on the Sikh side in Balochistan, so I think now the bit of understanding of it is coming over there. And that is something which we would like to force. And we want to collaborate with different insurance companies so we can come up with those products, so we can help them in case of anything happening and get avert the damage. And that has happened in the past when they have been really burned. That's where when this cycle gets disturbed, so obviously the whole economy is being suffered, especially Pakistan economy, which is mostly on agriculture, and they are being hit by different products. And then obviously in that scenario, there's a lot of, in global standards, there's a lot of shortage of different commodities. So it also has an impact on our nation's GDP. So this is something which we are trying and we are working with different insurance companies to work with. And I'm very confident this thing will work out.
Thank you very much. Any other thoughts on pricing, insurance, why the take doesn't scale so far? And what can be done to change that?
That's where we'll need to experiment on several ideas. And pricing is an issue if you look purely as if in an isolated manner versus the potential impact that we've seen in the prior calamities. So I think rather than pricing it separately, embedded insurance is something which we need to experiment with versus passing the burden on the customer. And that's where we'll need to figure out some innovative ways of doing it, everything with data, like technology, and then embedded insurance into the products. Then from a pricing, another way to do it is, if you see, it's an insured product, so we need to work with the regulators and the state bank around potentially looking at risk-weighted assets of the products which are backed by insurance, right? If a product is backed by insurance and those loans are backed by insurance, then perhaps we should work with the regulators on figuring out how the risk-weighted assets could be changed on insurance-backed products. But again, like the Deputy Governor mentioned, I think there's long ways to develop that trust between the industry and the regulator. But these are some of the things which we need to work with in collaboration with the insurance companies or leverage an embedded insurance, risk-based pricing, and then thirdly, on potentially over longer term looking at risk-weighted assets of insurance-backed products and working with SECPs on the world and the regulator.
Thank you very much. I'm not sure if you want to react to that.
You mentioned about insurance products embedded, offered to the by the institution in the form of embedded products. So I think we have some examples where certain institutions are offering such embedded sort of finance products to the aid society. One of the examples is in Microfinance. They are offering small loans embedded to the loans facilities where the forecast and insurance products are also in the form of micro and crop and cattle insurance. So whenever, though the existing framework is needed offering such products, going forward, for the need is required, we are available to work with the industry, insurance industry, as well as with the microfinance industry to facilitate offering of such products.
Thank you very much. Please.
So I totally agree. I think if you look at all the developed markets where microinsurance or climate-related insurance solutions are available, embedded insurance is one of the, I would say, straightforward direction to go into. because the microfinance institution is offering its own product, it's offering a loan to the customers, but then embedding various types of insurances along with that, especially in markets where the financial literacy level is low, and you cannot really engage with customers to explain what is being offered beyond a certain level. Embedding insurance into the whole proposition, the whole customer journey, just makes it easier to offer that product and scale it up as well. Just coming to that one point you raised about rewarding responsible behavior in terms of climate solutions, let's say. So we already have such an example, at least on the life and health insurance industry, where if a customer opts to lead a healthy lifestyle, so for example, is physically active, eats healthy food, so there are already products available in the market where incentives are provided, discounts are provided, or additional benefits are provided to that individual for his or her life or health insurance policy. So that same concept can actually be transferred or transposed into, let's say, if a microfinance borrower uses solar panels to produce electricity, so he's trying to live a greener approach towards his lifestyle. And perhaps this is food for thought for the insurance companies, that discounts could be given on insurance products just because that person is contributing to the climate. Now there are examples, there are pilots which have been done, especially in the African market, from what I know, where premium discounts or additional benefits are provided if a microfinance client actually is using greener methods of producing the fuel, let's say. So I think that's probably an idea which once we scale up the crop insurance schemes or other climate-related insurance schemes, responsible behavior can actually be rewarded in terms of incentives. So this, I believe, is a new idea which the insurance industry could look at. Because we have an example of such a structure on the life and health insurance side, so it could be adapted for these kind of products as well.
Any comments on this? Maybe this discussion makes me think of one topic also mentioned by we could discuss here, which is about impact investing, ESG, the topic of mobilizing finance to support the sector when it comes to climate adaptation. And these things that require financing, and there are investors internationally and also in Pakistan, I understand, who are willing to put money on the table to support climate adaptation solutions. So I wonder if any of you have any thoughts on this topic, any experience, maybe also from the regulatory side. If there's any measures to try to mobilize the capital that is specifically focused on this topic.
Separating the SCCP is encouraging the industry to opt on a voluntary basis. Would definitely encourage the industry to opt this social impact assessment within the existing framework, and this will encourage the lenders to extend the lending facility not only from the commercial bank but also from the wholesale lender, those entities who are better rated than the separate. So this would encourage the industry to opt for the social impact assessment in their policies and the policies that you are set up, so that this impact assessment can be further validated in the system.
Thank you very much. On the industry side, do you have any thoughts on the ESG impact investing issue?
So, some of the organizations, like including us, are purpose-driven with the mission of social impact in addition to the sustainability of the organization. And we regularly do surveys around the impact we've created in our mission towards poverty alleviation. And climate resiliency is now one of the major components of that mission. I think what helps an impact investor is when they see the outcome and the result. And via these surveys, like you've seen, where it's reflected via survey that each loan that we've given out in our case has created more than 2 jobs, right? helps the case. So as we bring out these climate resilient surveys and bring it out to the market to help attract the impact investors, it will help. For example, there have been studies done by OECD for Bangladesh and Nepal, which showed an overlap of existing microfinance activities towards climate adaptation to an extent of 40% overlap of win-win of climate adaptation to the microfinance industry. So similar activities, some of the surveys and activities and data collection we need to do in order to reflect on the baseline and create the baseline of how much are we helping today in moving towards climate adaptation, and then what's our goal with attracting an impact investor to this market and raising that bar and measuring it year over year is going to be critical for us. I think it starts with measuring to begin with, and I don't think we are actively measuring the climate adaptability in any of the surveys that I've seen from a microfinance perspective. So I think the first issue is start measuring, create the baseline, right? And then we can measure the progress over that.
Okay, so thank you very much. So I think the issue of measuring impact is always a huge. There's a wide issue around data, also on climate itself. I think on climate risk, one thing that we're trying to do is help with the modeling of climate risks of the sector. There's better information around that, and I can talk more about this in a minute. But I think overall, the need for data around climate for the sector is super important, and hopefully is something that collectively can be tackled going forward. I'm not sure if there are any other comments around this issue around impact investing in ESG. Otherwise, I'll maybe quickly, if you indulge me for a second, talk a little bit about the climate risk fund that has been mentioned a few times this morning, that we're trying to think about the World Bank and we're trying to put in place hopefully in the coming year or two. The basic idea of this instrument is really to set up effectively an emergency liquidity facility. And we heard that liquidity is one of the big issues. Now, awareness is a big issue, liquidity aftershocks, and also insurance. But the concept that we're developing at the bank at the moment is really tackling, at least in its initial stages, the issue of getting cheap liquidity to microfinance banks and institutions after shocks, so they can keep lending after the shocks. Because one concern we have is that there might be some disintermediation going on in climate-affected areas. So what we hope to do is effectively capitalize a facility which then provides liquidity lending to microfinance banks and institutions after specific shocks, and also to backstop this facility with some kind of insurance mechanism, kind of macro-type parametric insurance mechanism, so that if there's extreme shocks, the facility can provide grants as well for capital support. So it's very roughly the idea that we have. We have a mission this week and next week where we talk to several of you, also government counterparts and the regulators around this idea. And we really hope this is something that we can make happen in the next couple of years. I hear the issue around insurance products, microinsurance as well. So we also we have a few conversations with insurance sector representatives, and we will keep thinking about this issue. But the initial thrust of the work is really around the liquidity provision facility. But I think it'd be great to hear maybe once more from everyone on the panel, and then maybe during the Q&A as well from people in the room around whether the liquidity facility is something that's needed, and what else we need. We heard data, for example. I talked about risk. To what extent do microfinance banks and institutions have also on climate risk they used? To what extent do they have access to climate risk information? Technical assistance, I'd be very curious to hear from the panel on anything that they think would be useful to provide, or to get support from also government, but also from institutions like the World Bank and others, international donors. I'm not going to pick anyone, but
so I think there is a need, I think, of creating measurements, and that's where the technical assistance from institutions and experts who are already working in this field, because you ought to realize that the microfinance industry specializes in providing access to capital. They're not climate experts, and we should not pretend to be climate experts. And that's where we failed in the past, where we pretend like we become agri-experts. So we need to partner with the experts who can help us create those benchmarks so we can start to measure to begin with. So I think technical assistance is going to be critical to at least start to create that survey of benchmark across the industry, and then working with players like us. I think everyone will be forthcoming in working with multilateral organizations to enable that. That's number one. Secondly, I think we talked about the aftershock, right? As if we are waiting for the aftershock to happen and then we'll provide the liquidity. I think it's critical that we start to work on preventive measures. And that's where we need wholesale funding from multilaterals to enable us, the industry in itself, to spend on things like we talked about in the first phase around climate literacy, on climate adaptation, on providing access to renewable energy, right? Which we are part of the Paris Agreement as a country, also with lofty goals as well. So I think working on a liquidity model for aftershocks is of course important, which we've spoken about. I think right now is the time to talk about how to prevent it from happening. And investing in those, because investing in preventative measures is going to be much less costly than handling the aftershock from a multilateral perspective. So my plea to the multilaterals would be that this is the time to invest in climate adaptation versus focusing on the aftershock as we speak.
So maybe just a follow-up question on this. You're suggesting direct investments or also earmark financing to microfinance bank institutions so they can then investments in climate?
So it has to be public-private partnership through the industry. I would never suggest a direct-to-consumer. So it has to be via the industry where it's encouraged, where there's wholesale funding available for climate adaptable literacy products, suite, right, data, instruments, IoT, etc. to our customers. Via embedded finance, we are embedded insurance, we add other new products for housing finance or rehabilitation. But it needs to be on a proactive basis versus a reactive basis, which we still seem to be talking about.
Thank you very much. I think the point is very well taken. Please, if there's other thoughts from the panel, I would love to hear from you. Well, maybe it's a reaction to the facility that I just mentioned, but what else we can do collectively to support the sector?
I agree with my fellow panelists talking about more proactive rather than reactive, and also on the technical assistance side. But access to this technical assistance is being discussed a lot, especially on the climate side, globally. But the focus on Pakistan is very less. And as I just mentioned earlier, also that we are the climate is the fifth or sixth, maybe the top climate things which have been hurt by these climate changes, and we produce less than 1% of carbon emission. So I think access to impact funds will only work out when these at globally level, when the multilateral organizations are going to realize that there is a challenge in Pakistan. When you look at the macro for Pakistan, and then we can further define it to the microfinance space. And then until we have not been able to figure out the impact of the large cuts, which different multilateral organizations are trying to work out, and what exactly impact have we made when it comes to the Pakistan overall economy. There will be different numbers coming up, there will be different commitments made by different multilaterals and different countries to work on them and rehabilitate those areas which have been badly affected by these flood-affected areas. But in the practical, when we talk about numbers that is actually coming and actually hasn't made an impact, it's not being there yet. So I think we need to work on it. We have to create that awareness at the multilateral and also at the global level. Talking about Pakistan challenges in terms of the climate. And then once we realize that over there with them, and then we talk about Pakistan, I think then the second step will be coming into different sectors. And I also agree it has to be a public-private kind of a partnership where we can actually analyze how the consumers can be handled in case if anything goes wrong, and what will be the way forward for preventing that so it does not happen again.
Thank you very much. So, big plea for better monitoring evaluation almost and preparedness as well. So it's a key issue. I think on preparedness, I just want to emphasize that climate risk facility, in our view, in some ways is preparedness. It's financial preparedness for shocks, right? So, but I fully agree that you need to have preparedness in a physical sense. You need to obviously reduce risk and prepare in other ways for shocks as well.
I think sensitization is there within the industry. We all have recognized that what we faced last year, so requisite steps have been taken in the right direction by the regulators, the agencies, the ministry, as you mentioned that the risk fund is about to be established. So I think going forward, it is important that the requisite linkages between all stakeholders is developed. The need of awareness raising is much highlighted at this forum. I think going forward, the industry association, the PMN, Pakistan Insurance Association,